Hello and welcome back to Swing Trading Bootcamp by Wealthy Education. In this video, we're taking a look at how to identify market trends. We'll be using the exponential moving average and the MACD. The exponential moving average is an indicator that plots the average price of a security over N periods. You can select this. So for example, if it's 20 and on this chart, it'd be 20 days, it will give you the average price over the last 20 days at each candle close, and it will just move up and down right along with it. The idea, of course, is that if it's rising, we're in an uptrend. If it's falling, we're in a downtrend. There are a multitude of moving averages that people use. They are a guide stick. I would not use them for much more than that. And the MACD is an indicator that has the moving average convergence divergence is actually what it's called. And you can see it's got moving averages, a quicker and a slower one. And then the histogram measures the difference between the two. It turns, on TradingView, it turns green if it goes positive, and it goes negative, it turns red. Both of these can be used to show the trend or perhaps the overall attitude of the market, if you like. And you can see that there's the moving average. It places on top of the chart. You can change it by clicking this. So let's go ahead and do the 50 because the 50-day EMA tends to be widely followed. You can see that it is sloping up, so that tells you the trend we have been gaining over time. With the MACD, you can see that the histogram has been green this entire time with the exception of a couple little moves. This area here, it went red, so the trend definitely was dropping, but the longer-term trend was still higher. So this shows you a little bit of a confluence of a pullback in a longer-term trend. You know, I would not classify that as a negative trend, just simply a pullback. It's something that you typically get. You can see that the histogram in the MACD had gotten lower as we had risen. That shows that we are losing momentum, and that was your first sign of trouble. And then the low had gotten lower, so that shows that the sellers are starting to become more aggressive. There's a lot of different ways you can use these indicators, and they are some of the more common ones that you'll see. Another thing that people will pay attention to is moving average crossovers. So when the quicker one crosses over the lower one underneath, that's when you may start to see a little bit of momentum pick up. And we did to a point. It wasn't the greatest signal. But the most simple way to use this is to simply pay attention to the histogram, whatever side of the zero signal line we are on. Tells you what the mode of the market is, the momentum. And then, of course, if you use it with a moving average, like the 50-day, it can keep you on the right side of the market. So even though this was negative, the 50-day was still relatively bullish. We did flatten out a little bit, but we hadn't rolled over to the downside. So you would have known not to short. You can see that we went higher. And again, like I said, we got a little bit of divergence, lower momentum to the upside on the next high. And then you started to see the histogram go red, and it went really red. The EMA started to drop, and that's the sign that we're entering the downtrend. I'll go ahead and put these indicators back on this chart here, and I will use the same settings just to show you how it works. Okay, so this is your moving average convergence divergence indicator, just as we saw in the last time. And this setting here, I will change to 50 days again. You can see that the indicator gets a little flat here, and you'll see that when you're consolidating, but then we make a decidedly negative move. It lines up with the histogram right here, going very red all of a sudden, and that shows you which direction we're going in. Doesn't have a lot of momentum. It's a very gentle downward move as the histogram is fairly weak. We got a nice little pop here, and we did break the moving average, but the moving average hadn't turned up yet. So this just shows you that we've had a nice retrace. And once we break down below there, the red picks back up, and we start to fall with a little bit more authority. These two indicators are quite often used together. They are some of the more common indicators, although, again, price action will be the main trigger. So you'll learn more about that later on. The right candlestick at the right time with these indicators makes a huge difference. But you do need to have an idea as to what the histogram means, the slope of the moving average, the average price is falling over the last 50 candlesticks, etc. It gives you an idea of which direction of the market you want to be in.